Yes, we can. Okay, awesome. All right, great. Sorry for all the delays and the technical issues. I'm a total amateur at this and have no clue what I'm doing. So I'll just throw that out there to start off. Um, if you guys throw questions at me or anything that you guys want to hear me talk about, I really wish we could have more of an interaction where I could cue people and then they could be on the screen, but unfortunately I haven't figured out how to do that. But if you guys just type your questions right in there to the live chat, I'm seeing the live chat, and I can just go off of that. Just waiting to see something get queued. That was the very first question I had last time was Bitcoin, currency problems today, the Asian market in a good condition. Let's start off on that one. So, you know, in my personal opinion, I think that when you look at China versus Japan, those are two totally different discussions. Let me start off with Japan. You know, enormous amount of manipulation happening over there. Now, I just read something on the Wall Street Journal this morning saying that they've had their longest amount of growth, which was like 1 or 2%. In something like 19 years or for a very long period of time. And I think that a lot of that's going to be short-lived. I don't see this lasting another 5 years. There's no way. I have a lot of concern about how Japan is going to be able to handle the next phase of their enormous financial experiment that they're doing. With respect to China, you're seeing the largest amount of credit expansion ever over there right now. I saw a chart just in the last day or two that showed the comparison of their credit growth compared to some of the other markets in the last 50 years, and it's astronomical. I think I saw it over at D-Short. Can't remember where I saw it, but I think that that's a concern. I mean, you can create a ton of credit, and in the short term, that's a great thing. But in the long term, when you look at a decade, 15 years or something like that, that's when it becomes much more concerning. And you know, how they're going to manage that reinforcing downturn is going to be quite interesting to see. Now, with all that said, I think China has a lot of promise with respect to how much the population can grow in the long term. So I guess in the short term to intermediate term, which I would call 5 years, I think they've got a challenge on their hands. But I think in the 30 to 40 year context, I think maybe you're going to see a boom over there. But you know, more to be seen. It's all hypothetical. I mean, there's so many things that can change in that kind of time period that it's kind of futile to make too many assumptions. But okay, so I'm looking at Lightstar here. What is the best online broker that we can use to? I mean, it really depends on what you're looking for. I mean, if you're looking for something that's going to give you a lot of research tools, then you know, you're not going to want to use these ones that are completely free for trades. Robinhood is the one that kind of comes to mind. So if you're able to conduct your research in other locations and you're not looking for any type of those tools, you know, I guess Robinhood would be a good choice for conducting these frictionless trades. But if you're looking for something that's going to give you a little bit more of a little more depth on research and things like that, then I would recommend some other platforms. You know, we Ally Invest and Trade King was, you know, something that we stand by. We really like their platform. It's easy to use. $5 trades. You know, there's a bunch of different platforms, but I think if you're paying over $10 for a trade, you probably need to be looking to go somewhere else. Okay, let's see here. More videos on the Intelligent Investor. You know, Stig and I, we created a course around the Intelligent Investor, so that's why I stopped making my videos, because we have a paid course for that. So sorry, I'm not doing any more of those. I started off doing some, and then I got busy, and didn't have time to come back to it, and then Stig ended up following through with it, and we have it on our site as a paid course. So it is hard to transfer funds overseas. Yeah, that's changing with some of this blockchain stuff. We'll see. We'll see what it looks like in 5 years from now. Market conditions, short-term, mid-term view. So my opinion of the current U.S. market condition in the short-term and mid-term view. Short-term, I mean, yeah, we're seeing the market go down for the last couple days. I mean, man, you can't really make the assessments on what's happening just based off of the last couple days or even the weeks. I don't see anything right now that's going to cause this thing to have a big meltdown in like the next month or two. And most of my reasoning for that is because you're not seeing the central banks change their positioning very much. They're just kind of sitting steady. You still have a massive amount of QE happening in Europe, and you also have a lot of QE happening over in Japan. And the U.S. central bank is not even moving at a snail's pace as far as their tightening. So as long as I think those conditions kind of continue to persist, I mean, my expectation is that nothing will happen. Now, something crazy might happen with European banking, call it Deutsche Bank, and something like that can trigger a market reaction really fast. So, you know, as much as I say my expectation isn't that nothing crazy is going to happen here in the next couple months, you never know what's out there and what might spook the market. We're definitely at a very, very high price compared to the earnings of the market. So when you're in those super saturated conditions, is what I like to call them, you never know what one little thing might spark the whole unraveling at that point. So I guess in the short term, I'm just kind of expecting more of the same. I'm not expecting the market to move in any major direction up. It might come down a bit, but in the midterm, which I would say midterm for me is like 2 or 3 years, I see the market pulling back within a 3-year period of time. Long term, you know, go out 10 years plus. I think if you're fully invested in the U.S. stock market today, you're going to get a 3% return. We've been saying that on our podcast for quite a while. So, I mean, if you're fine with a 3% return, then have your money there. I think there's other places, you know, especially on the private equity side, which I know is hard for a lot of people to access, but private equity is probably giving you at least twice that return. You know, something that's interesting that we're seeing happening in the current market right now is the high yield bonds. I have a short position in high yield bonds. I've had it for a long time. It's been a very, very painful position because it just kept going down since I bought it. But it's starting to feel like maybe that's starting to change, and maybe the high yield bond is starting to start to sell off. So that'd be good for me. For anyone else who took that position, it's been a painful experience. But luckily, I didn't have a very big position size, so it's been kind of easy to weather the pain. But yeah, last week it's looking like it's starting to turn, but that's no indicator of what's to come. I mean, they could still kind of come back, and people could be buying it stronger. So we'll see what happens. But usually, when you're looking at changes in very large credit cycles like the one we're in, my opinion is that you'll see the high yield bond market start to reverse itself first, and then you'll see it go into the more secure fixed income positions. So we'll see what happens. Okay, let's see here. I'm sorry I don't have any good suggestions for European companies right now. I tell you one thing, European banks scare the heck out of me. So I would not put your money there. Preston, you have written some books. What book you would recommend for writing? For writing? Oh, I don't know, man. That's based on your skill set. Do you use any technical analysis for your executions? No. I will say this. Technical analysis I find entertaining. Like Peter Brandt, I'd be lying to you if I didn't tell you I looked at his Twitter feed. But I don't think that I make any kind of decisions off of technical analysis. But I do find it entertaining to kind of look at. I want to start a business, but I don't have much capital. Will you help me? Hey, the best advice I can give you is look for something a business that you can start with very low startup capital and just hack your way through it. And you're going to have to be very persistent, and you're going to have to stay the course. It's very difficult to do. But I wish you the best of luck with it. More about the Bitcoin fork. Oh man, we're getting a lot of Bitcoin stuff. The reason in my spare time I spend a lot of time trying to understand cryptocurrency. I'm not going to lie, but I'm a little hesitant to talk about it too much in public forums because it's just so risky. It is so risky. So I hate to give any kind of advice with it because I just don't want people to lose their principal. And I think that if you're playing around with cryptocurrencies, I think that you should be doing it with a portion of your cash flow that you could literally go to zero, or you could lose a significant amount of it, and you would be fine with that. So what I recommend to people that have excess cash flow coming in every month, I would tell you if you're putting more than 5% into any type of crypto, it's probably maybe a little bit an over allocation. I can talk the fork some more if people. Do you guys want to hear me talk about crypto? Is the group text in there Y if yes and N for no, and I'll kind of get a quick feel for whether you guys want me to talk about this or not, because I don't want to cover it if just one or two people out there want me to hear talk about this. So type Y if you want me to talk crypto, and N if you don't want me to talk crypto. I'm just going to get a quick feel here. Yes, no. No. All right, so it's kind of mixed. No. Okay, all right. Bunch of no's there. Yeah, quite a few yeses. I might talk it. How about this? I'll talk it before I'm done. So we'll put that off to the end. All right, so I see a question here about the Russian market. Is it safe? I think that the big concern for me with the Russian market, and like if you're going to invest in Russia, I think that you got to make sure that you're buying large cap companies and not smaller companies, because the accounting, it's not like you got GAAP over there. I think that if you're going over to Russia and you're investing in some type of company, it probably should be in an ETF, or it needs to be in a very large company, like we talked about Gazprom on the show. One of the major concerns for me with Russia in the past was really the inflation rate and kind of that eroding any type of return that you'd be getting on your money. But that seems to be changing, and I think that the inflation rate seems to be under control by leaps and bounds compared to where it was just a few years ago. So could that come back? Could that become an issue in the future? Absolutely. And if it is, that's something that might be a sell criteria for you. But I guess I'm comfortable buying larger companies or buying the entire index. But that's me. I think other people have to weigh how comfortable they are. A lot of the individual stock picks are kind of hard for me to talk, because if I'm not familiar with the ticker, it's I'd have to go into the financials to really kind of give you any kind of useful opinion. Can you talk a little bit about valuing cyclical companies? Can you use a DCF model for these type of companies? So, we talked a little bit about that with Jesse Felder when he was on our podcast last. The main thing I think for people is you got to understand where you're at in that cycle. You got to understand what the adjusted cash flow will look like. So if I'm looking at a company that's a cyclical and it has really high cash flow today, but really low cash flow 5 years ago or 6 years ago, you're obviously going to want to take probably the middle of that and maybe a little bit less. And then use that to try to determine kind of where you're at as far as an intrinsic value on the business. And what I think you'll find is, and the other thing that's really important to understand with cyclicals is typically when they look the worst, like you'd never want to own it, and I mean this is almost for any stock, but especially for cyclicals, when it looks like death and destruction is the only thing to come, that's probably the best time to be in a cyclical. And it's mostly because so many people are selling out of that position because the cash flow looks so weak compared to what it was just a few years before. That's when you're going to make some huge returns. And if you look back at the episode we did with Jesse, when he talked about the cyclical that he purchased, he has had massive, and I'm talking about Jesse Felder, he's had massive returns just in that short amount of time when he recommended that on our show. I mean, it outperformed everyone else's pick by a huge margin. So kind of an interesting discussion that we had on the show. I'd recommend going back and listening to that mastermind that we had with Jesse Felder to learn a little bit more of his thought process. Let's see here. Nora, thanks for the thank you there. Let's see here. I can't talk too intelligently about the Indian equity market. I know that whenever I look at where all the markets are, let me see if I can pull something up here and kind of show you guys a chart. It's going to take me just a little bit to find this. But if you've never gone to the website dshort.com, I highly recommend that you go to this website because the charts there are just awesome. And he puts up this chart where he shows the growth of all the stock markets in the world, how much they've performed over the last 5 years, over the last 10 years. And I really like this chart because for me, it really helps me understand where we're at in the credit cycle, or it kind of gives you an idea of like how mature things are. It's not going to tell you when you're at a top. It's not going to tell you, you know, I guess it might give you kind of an indication on the bottom, but for the most part, it just kind of gives you a general idea like, hey, I'm in the top 75% of this credit cycle. So let me see if I can, this might be a big risk here. I don't know if I can pull up my screen, but let me see if I can do this. Let's try real fast. Okay. Local desktop presenter. Okay, I think this is right. I'm so bad at this, I'm sorry. Okay. I think that's right. No. One more try here. If I can't get it here, and then I'll just... there we go. Okay. Okay, can you guys hear me now? I think you can. Looks like me sharing my screen is probably not going to work. Hopefully you saw it there for a bit. But that's a really important chart for me because I'm looking at that and I'm understanding kind of where we're at in the market cycle, and it kind of gives you an idea. And when you look at that chart on D-Short, you're also able to, now you know what, I'm going to drop the link into the chat board here for you guys. Okay, the link just went in. And if you click on that link, you can see the chart that I'm talking about. And in there, you can kind of see where the Indian market is, how much the Indian market has grown through the last credit cycle. And it's performed, the Indian market has performed since 2003 better by a lot. I mean, not even a comparison to the other equity markets around the world. So when we look at that and we kind of say, where is India going to go? you know, if it can keep that pace, if it can keep that trend alive, I mean, yeah, I mean, it's going to be a great market. But as far as I don't have enough information about the Indian market to be able to say that it's going to look like that during the next credit cycle. So, but I find that to be an interesting metric and something that's interesting to look at historically to see how India has performed over the last 15, 20 years. Yeah, we have a Facebook group. If you just type in "We Study Billionaires" Facebook, you'll see it on Google. Yeah, somebody wrote, India is not going anywhere. And I hear a lot of, Jim Rogers, when we talked with Jim Rogers, he kind of said the same thing. He was hesitant to say that it was going anywhere. I just don't know enough about it. I just look at that chart that I just posted there, and I find it pretty interesting. Yeah, Jim has predicted the greatest crash in our lifetime in the coming years. Any thoughts on this? I didn't see the Monish Pabrai question above. If you could repost that, I'll take a look at that. I'm an optimistic person in general. Although we talk a lot of doom and gloom from time to time about what might happen, I'm a very optimistic person. I think that the coming credit event is probably going to be pretty bad, simply because these central banks don't have any ammo left. And if that's true, then I don't really know how they're going to stop the momentum that this thing's going to have when it does start to unravel. I think that that's going to be a real challenge, and I mean, this is one of the reasons I'm so interested in cryptocurrencies, because I think that if you have an alternate form of currency that you can swap into that's fixed, that the monetary baseline can't be changed, I think that that might be a very powerful play through a lot of this, and so would gold. I mean, you go back to, I think this is an important discussion. So when you go back to 2008 and you look at how gold performed through 2008, and you go summer of 2008 through the fall of 2008, through like the first month or two of the crash, you'll see the price of gold relative to the USD. It went down, and I think it went down by 20 or 30%, because when you're in that environment where credit is contracting in a massive way, the most valuable thing you can be holding are dollars, is that fiat currency, because what's happening, and you got to think in the way that the supply of that currency, when that credit dries up, if you had, let's just say, 100 units of whatever currency before the credit event occurs, and call it 60 to 70% of that currency, that 100% unit, 70% of that's actually credit, where 30% of it is like actual real monetary baseline that's there. So as that credit event happens, that unit would slip to a much smaller, it might be 50 instead of 100. And when that happens, if you're holding that fiat currency during that period of time when that credit event happens, it becomes very valuable, it becomes very sought after, and then you're in a unique position to then take that and apply it to, once the credit event basically contracts to its limit. At that point is when, and it happens very quickly, it happens in just a few months, or at least it did in the last cycle. Right at that point, that's when you really want to jump on the commodity or currency that has a fixed supply, that's pegged, because at that point, that's going to run. And when you look at what gold did from, and I'm just throwing these numbers. I haven't looked at one of these charts for a long time, but I'd be willing to guess gold from November, December of 2008 for the next 2 years probably did 100% return, or maybe more. So I kind of expect the same thing to happen on this credit cycle. I expect Bitcoin specifically to probably do something very similar, maybe even more extreme than gold, because it's the new flashy thing out there. But we'll see. We'll see. And I think that people that don't understand what Bitcoin's trying to do, I mean, it's trying to be a digital gold, and so far it's proved to do that pretty well. but we'll see what happens in the future. Again, if you didn't hear my first part, if you're allocating capital to something like Bitcoin or any of these other cryptos, I think you need to be very careful when doing it in a very small portion. Stig's actually in South Korea, so he's over there doing a he's over there with his wife. His wife's teaching. She's a doctor, a PhD in economics, and she's over there teaching right now. But then they'll probably move back to Denmark after this summer. When's the next economic crisis? You got me, my friend. Here's the Pobright question. Did a great talk on multi-baggers and has done very well with the fiat and other investments. Any thoughts on bringing him back for an update interview? Yeah, we want to bring him back. In fact, I would like to do like a Google Hangout with him, do something live. That would be really fun. But yeah, we need to send him a message. We got Guy Spear coming on the show. We're recording with him at the end of this month. And then I was hoping to do something with Monish around Christmas time again, and maybe roll that out around Christmas time. So I haven't sent the message to Monish, but I would think he'll say yes. We'll see what happens. Real estate market, but it is now skyrocketing. Any thought? Real estate, man. I just don't feel like I'm informed enough to make an opinion on that. I don't want to steer anybody wrong, but everything's tied to interest rates, anything and everything. And when you look at real estate as an investment, if interest rates go up, that can be not the best thing. So I would just be careful with that. We're in an environment now where the Fed is tightening, and I think you got to be careful with that. So, yeah, his Guy Spear is awesome. If anyone listening to this right now ever wants to go to the Berkshire meeting, Guy is there every year, and he's incredible. And he hangs out with us. He comes to our pub crawl that we do. Really fun guy. So smart, ridiculously smart. Okay, what's your view on altcoins in the crypto realm? All right, I'll talk a little crypto for you. So, in my opinion, altcoins, you're investing in the protocol. You're not investing in the next currency. I think that when you're, and this is where I think everyone gets very confused when they're talking crypto. So you got crypto that can be, the main thing that Bitcoin's trying to do is it's trying to become the next global currency that has a fixed monetary baseline that then forces domestic currencies to be pegged to that, or else they pay the price and the buying power of the people within that country goes down. That's what Bitcoin's trying to solve. All these other protocols, and I'm more comfortable calling them protocols than altcoins, because the protocols are trying to either do one of two things. They're either trying to assist with other applications that could then be applied to Bitcoin itself to improve it, or the protocol, the altcoin, is being used to replace an application that currently exists on the internet. And it's trying to remove the overhead that's associated with that application. So let me give you an example. So let's just take, and this might not be the best example, because let me just use this. So Facebook, okay? When you think about Facebook, so much of what's being done could be just a protocol. It could be a protocol that is set up by a bunch of programmers that performs a function for people to interact socially on the internet, just straight through the protocol. And the way that the protocol could be, aspects of the protocol that could be used is that advertisers could actually advertise. Say I'm using Facebook and I'm seeing messages on the right rail of the browser. Those advertisements could actually be money that I'm making. It could be money that the advertiser would pay to me directly if that protocol that's established that mimics Facebook or whatever other social media site that's out there, if there was a coin that was associated with that protocol, an advertiser would have to buy that coin through the protocol, okay, and then as a user of that platform, I could get paid through that coin. And so, in essence, I could be paid to use, as a user of this Facebook protocol, I could be getting paid to use the platform. And so that's a very exciting use of blockchain technology that I think is out there and that might, you know, arrive in 10 or 20 years from now, maybe not even that long. But whenever I think of altcoin and it has a really negative connotation to it, I think that where the value of an altcoin will be in the future is a protocol that replaces an application that then removes the middleman and then allows a person that's using the platform to receive payment and basically, I mean, think about it. If you're using Facebook right now, you're getting paid nothing. In fact, you're allowing Mark Zuckerberg and every other shareholder of Facebook to make a whole lot of money on you putting out your personal information on that. I think that that's going to change in the future. I think that in the future, the people that are putting out their information and their privacy for other people to see are going to be actually paid for that through crypto coins that are embedded into that protocol that would replace those applications. When you look at the way the internet structures, so you got the protocol layer, which is the, you know, HTTP, SMTP, all that stuff. That's a really thin layer. Then you got a really thick layer on top of that, which is the application layer, which is Facebook, Google, all these big companies that are making billions. But what I think is going to happen in the future is I think that you're going to see the protocol layer get a lot fatter. You're going to see the application layer shrink. And I think that that's going to be mostly these altcoins that are doing something like that. When you talk about Bitcoin, it's completely different because what it's trying to do is create a global currency. So I know I went on a ramble there. I don't know if I even explained it that well, but some interesting thoughts that I think people need to really kind of understand what the technology of blockchain actually offers for the future application of things that are happening on the internet. Nah, I don't know how the tax plan will affect things, to be honest with you. I haven't dug into it too much. I don't really spend too much time on a lot of that because so much of it could just get voted down and then all your time that you spent trying to understand it is worthless. So if they pass something, then I'll probably dig into it a little bit more. What's the guarantee that there is only going to be 21 million Bitcoin? So the thing about the, sorry, we're talking crypto some more. If you guys absolutely hate the crypto talk, just type it in there and let me know and I'll try to get off of it. The assurance that you're only going to have 21 million Bitcoins is that it's incentivized for people to, especially early adopters, to not want to increase the monetary baseline of the protocol. So when you think about the people that are really kind of controlling the protocol at this point, the changes are based on the nodes. So it would have to be something that everyone agrees with in order to adjust the monetary baseline. And I think you got so many people out there that have made a ton of money on Bitcoin specifically that the last thing they're going to want to do is to dilute that value. So it's incentivized in a manner that isn't going to allow, in my personal opinion, the 21 million coins to be adjusted higher. I don't see that ever happening. But that's me. I mean, what do I know? There's a lot of people out there that might put up a strong argument against that. Beginning investor, I'm wondering if it would be smart to delve into an index fund first and then apply the principles of value investing later as I gather more experience. Probably. That probably wouldn't be a bad approach, Sally. I would just be very careful today and just realize that if you're buying an index today, that your expected return, if you would buy that and hold it forever, the expected return is very low. You know, you put $100 in, you'll get $2 or $3 back every year into perpetuity based on the price that the market's at today compared to the earnings. So as per blockchain paying for you, giving away your privacy, security be. Well, that's the big part with the security. I mean, even anything that you post on the internet is a security concern. So, I mean, if there's a protocol that then replaces one of these social media sites and you're posting all your stuff, I don't see how that's any less secure than what you've got right now, to be honest with you. Glad to catch on. What do you think about swing trading? It's not something I do. You know, I think if you are trying to do something like that, I would read up on Stanley Druckenmiller, George Soros. Those guys are the king of that stuff. I think some of it's your personality has to be wired for that stuff. That's not kind of how my personality works. I'm more of a fundamental kind of guy that digs in on something. Thank you for the Thanksgiving wish. Yeah, same to you. Any other points you guys want to hit here? We'll go probably another 5 minutes and see what we got. Okay. Which area is better to invest? Gold, cryptocurrency, real estate, or bank for short and long term? Well, I can tell you I'm not a fan of any banks right now. You know, this might be a really bold statement, but in my opinion, I wouldn't be surprised to see a lot of banks get nationalized within a decade, 10 to 20 years. I wouldn't be even the least bit surprised to see something like that happen, and most of it has to do with the fact that the pressures that exist right now is that these interest rates are going to keep pushing lower until you know, global currency could potentially offset that and peg it. I mean, that's why I guess I'm so fascinated with crypto, is because I really kind of see that as being one of maybe the only solutions to stop this enormous bull market that we have in fixed income, which is completely being manipulated by governments that are just buying at any price. So, you know, as far as banks go, I think that that's very concerning, because for a bank, if interest rates keep going lower, that's hard for them to make money. So we'll see what happens. You know, I found it interesting. I was reading Nassim Taleb's Anti-Fragile book, and he said the exact same thing about banks potentially being nationalized in the future. But, you know, there's a lot of people, especially in finance, that would really roll their eyes at that comment. And, you know, I'm fine with that. I might be dead wrong, but I wouldn't be surprised. I think that the European banking situation, you know, when you look at how much the U.S. has changed their banking regulations since the last financial crisis, it's been a very good change to bring stability to the U.S. But unfortunately for the world, the U.S. aren't the only players in this sector with banks that are too big to fail. And so when you go to Europe and you look at especially a lot of these Italian banks, that's a very big concern that can have a ripple effect into the U.S. and to other markets, even though the U.S. has all these regulations and everything to help prevent that from happening. It's only as good as the weakest link in the chain, and unfortunately we live in a global society where European banks can have a dramatic impact on banks here in the U.S. So I'm not saying that's what's going to happen, but I wouldn't be surprised if something like that happened that might even trigger the next you know, credit event. No one trusts credit rating companies. Yes, you're right. And this is really neat. I have a friend. She went to MIT, just recently graduated. She's starting an AI company that actually goes in and puts machine learning on all the 10Qs and 10Ks of the entire publicly traded companies. And then what it's doing is it's looking at historical references for companies that failed based on the correlation that they learned from reading those 10Ks. And then it's marrying it up against what Moody's and other rating agencies had done. And so using machine learning to actually assess the credit worthiness of the debt of a business and the solvency of a company through machine learning, I think is something that is very fascinating and will be very useful in the coming 5 to 10 years. Would you recommend using book value, intrinsic valuation for banks and financial companies as opposed to the DCF model? For me, Charles, to be honest with you, I'm not even entertaining banks right now. And you know, most of the reason why I guess I'm not even looking at banks to conduct a valuation is because when the bond yield curve starts reversing itself, or it starts becoming flat, where the long tail of the bond yield curve is producing the same yield as on the short-term side. And we're not there. It's still positively sloped. But as that transition continues to happen, because as the Fed pushes the federal funds rate higher and higher and higher, that bond yield curve starts to flatten more and more and more. And when that happens, banks are screwed. They cannot manage that flippening of the short-term versus long-term interest rates adjusting. So as we start getting into that position where the Fed is pushing in that direction, I really, maybe I'm just petrified, but I start staying away from financial institutions. So maybe something like looking at the book value of the bank might have some utility at the bottom of a credit cycle after you've kind of cleared, after the dust has settled, and you're a couple years out of the bottom of a credit cycle. Maybe I would agree with that statement, and if you're buying banks at that point. But I think this next credit cycle, I don't know that. We'll see. I don't want to make too much forecasts, but we'll see what happens. The websites that you usually read. Let me get this information. I pointed out one website earlier, the D Short website. I really love that site. I'm a big fan of the Wall Street Journal. I'm also a big fan of Bloomberg. Mostly because I think that it helps keep me more balanced. There's people out there that'll read these doom and gloom sites like Zero Hedge and whatever. I'd be lying if I told you I don't sometimes peek in there and look at what they've got going on, but I think that it has a tendency to make you biased, and you get confirmation biased really bad when you get away from some of the other more balanced financial news, which I think one of the most balanced ones is the Wall Street Journal for me personally, but other people might disagree with that. Let's see here. Telecom operators, I mean, I know one thing, their high yield debt market is getting crushed right now. So I don't think that that's a good sign. I think that that's a concerning sign, but I haven't really dug into it further than the bond part of it. So, chunk of IBM, is there any way... there's a mention that Buffett sold a chunk of IBM. Is there any way to see what exact date he did it? That's going to be published in the quarterly. I think you'll be able to see that pretty soon. But I don't know the date right now. Bull oil market. I don't necessarily see a bull oil market right now. Maybe after the next credit cycle, once that kind of bottoms, you might see oil go crazy. But after the demand and supply kind of works its way out, because you're looking at, I look at the oil market as being more of a fixed supply kind of commodity, kind of like the way you look at gold. So I think that something like that would perform really well after the credit cycle. But I don't see oil going wild here in the next couple months. I see it just kind of fluctuating between $40 and $60. 5 books to start with. I mean, I'm very biased in this opinion, but I tell you, go to Buffett's books and go through our 10 videos, or our 10 hours of videos there, and I think that's going to give you a really good introductory overview of, how bonds work, how to value a bond. Then, and after you learn how to value a bond, then you learn how to value a stock. I'm very opinionated on that one. I think that people that try to learn how to value stocks before they even know how to value a bond are doing it out of order, because valuing a bond's super easy compared to valuing a stock. So if you can't get that one right, then you're really going to struggle doing equities. What would I buy after the market correction? So, there's companies that I think have a really strong competitive advantage, but again, it still comes down to how depressed the price gets relative to the earnings. So, although there's companies like Google that I would quickly name, I think it still depends on how depressed the companies get. So, I'm a little hesitant commenting on that. The big ones are Apple and Google, and these companies that have a huge moat, just enormous moat, are the ones that I would name today. But you'd have to see how much the price punishes those companies through the credit event. So I'd have to make my decision at that point in time. Can I work for you for free? We get some offers like that from people. If you want to volunteer and help out with the community, feel free to shoot us a message. Just go to our AskTheInvestors.com page where people can record questions. There's also an input box there where you can put your name and stuff, and you can put your name in there. And I'm sure Stig really manages a lot of the day-to-day. I'm more just doing podcast stuff, but Stig handles a lot of the interactions with our employees and people that want to volunteer. So. He'll get back to you if you let him know. What's your view on the gold market? I'm not a buyer right now. I know that Ray Dalio just took a big position from what I saw, but I didn't still take a position. I mean, for me, it's been pretty flat around the 1200 range. When we talked with Jim Rogers, he wasn't a buyer at this level, and his comment to me was, "Hey, I don't want to buy that until everyone just hates it." And I think right now, I don't think everyone hates it right now, and I would agree with Jim. So I'm just kind of holding off. And like I described earlier when I was talking earlier, when you look at 2008, gold went down by 20% or 30% from the summer into from the I'd say the spring of 2008 to the bottom, or close to the bottom, not to the bottom, but probably November of 2008. You saw it contract quite a bit, and I would expect the same thing to happen, because I think what's happening is a lot of people have to sell their position in order to meet their margin calls for other positions, and I think that's why you see the price get punished, because credit's contracting. Then as soon as that's done, maybe even a little front running the bottom of the credit event, you'll see gold start taking off, and I will own it during that period of time. But we're nowhere near that right now. Thanks for all the compliments, guys, and the comments and the thank yous. It really does mean a lot. Do you use DCF often when valuing stocks, or you just use it in very predictable businesses? I'm not a big fan of DCF. It really depends. Sometimes DCF is kind of bad to use because the cash flows are just so lumpy on the business. So it really depends on the company. And when you're looking at something that has a really steady free cash flow, then I'm comfortable using discount cash flow, and I'd probably prefer that. But when you get into the companies that have lumpy, cash flows, then it might be better to go to some type of multiple point, and then kind of look at how the industry is trading at a multiple. Kind of look at what your alternative options are as far as investment opportunities, your opportunity costs, and kind of see if that multiple makes sense. I mean, that's sort of what we did with the Gazprom. If you read our Forbes article on Gazprom, that was, that's kind of how we approached that one. Forex markets. Oh, hold on, I got to answer this Army-Navy question. Come on, of course Army's going to win. I know it was a few years, but last year we pulled it out. We're going to pull it out again this year. I'm going to the game, so if you're going to the game, hit me up. I'll be at the tailgate. Never talked about Forex markets. To be honest with you, I think Forex markets are extraordinarily hard to trade. I don't personally understand them well enough to talk about it. There's people out there, another Stanley Druckenmiller. I mean, I think he makes a lot of money in Forex, and he obviously knows what he's doing. So my recommendation for that would be go follow somebody who is a proven success at Forex. I don't think there's too many of them out there that have done it consistently over the decades, but I would go find those people and follow them closely. I don't even want to say but I've seen some people saying that the dollar is going to have another run, but who knows? I mean, who knows? And I've never invested in the Brazil stock market. Don't know that. Well, there's a really big company that I owned that was a Brazilian company. I can't even remember the name of it. Anyway, what's a good free resource for learning about the industry as a whole? Buffett'sBooks.com. I'm biased, but I mean, it's 100% free. You can't get more free than Buffett's books. The millionaire question. Yeah, I'm gonna pass on that. More, but it's more from creating your own business that you become a millionaire, not you're investing. You know, this is what I tell people. When you create a product or service, that's where you're going to see the largest returns of your life. Once you have those large returns and you've created your business and you've created your product or service and you have customers and you're adding value, the investing part is how do I employ those retained earnings properly? And so that's where a lot of the Buffett stuff comes in very useful, is how can I then take that I can't invest operationally, the excess money that I've made that I can't invest operationally with high probability of success with low risk attached to it. That's where you want to take it and you want to invest it in a public or private market, and you want to apply a lot of the principles that we talk about on the show. So you know, that's hopefully something like that helps you think through how we see that. The Schiller PE is at 31 and is higher than Black Tuesday and second only to Tech Bubble. Do you see this as a concern? Do you see this as being outdated? I think it's a major concern, and you know, let me rephrase that. So you can say it's a concern, or you can just say, "Hey, I know what I'm getting." You know, when it's priced that high, you know you should have a reasonable expectation of what kind of return you're going to get. So if you're taking capital and you're putting it into the equity market at that valuation, you should expect a 2 or 3% return if you continue to hold it. And if you're comfortable with that return, there's nothing to be scared about. You can just hold it and hold it. And if the market goes down a ton, I mean, you should have expected that, and it's going to come back, and you're just going to continue to get your 3%. So it's not, you know, it's just what it is today. And if you're expecting that kind of return, then you're good. And you're comfortable putting money to equity and getting that return, then you're good. Do I still think there's, yeah, of course there's insider trading happening. You know, that's always going to be a function of markets. Do I know anything special about Nepal? You know, I know you have a really big mountain there, and I climbed 29,029 feet just a little bit ago, and it was brutal, and that's about all I know about Nepal. Sorry, I can't help you with more. Any sector that I'm excited about other than crypto? To be honest with you, everything's just so expensive right now, and I'm not really too excited about too much. It's kind of been it's been a rough couple years, to be honest with you. I think that a person who is a really successful investor makes their money in the markets of today, because what they're doing is they're being patient, and they're not, you know, a person loses a lot of money when they're impatient, and they're just like, screw this, I'm just gonna go all in because I've been sitting on my hands for the last couple months or a year or 2 years, and that's when it can really, really get you. The Canadian marijuana sector. So I don't look at things that I don't think add value to society. So I know that's kind of a bold, you know, statement that people will probably roll their eyes at, but I'm just not one to invest in something like that. I guess for me, I've been burnt so many times in the past investing in things that, you know, really aren't valuable to society, and maybe I just have a bias towards that. But I don't even look at the sector, even though it might have a huge upside, because it's just not something that I think is good for society. So I just don't want to allocate my capital to it. Sorry. Impact of Fed unwinding its balance sheet. I don't think that, I just don't see them unwinding it very much. I think that most of it's all talk, and I think that they'll probably unwind it a little bit, but it's not going to be anything that's meaningful, because if they do unwind it in a meaningful way, it's going to have a cataclysmic impact to the market. So they can't afford to do that. So I just see it as like a non-issue. I think it's a talking point that everyone's going to continue to iterate, and there's going to be narratives all built around it, but at the end of the day, it's just all talk, and there's not going to be any action to it. Favorite psychology book? You know, I'm a very big fan of anything that influence. I'm a very big Cialdini fan, and you know what? He's a really nice guy. We've had a few interactions. He comes out, well, at least he came out to the Berkshire meeting this past year, and we got a chance to hang out with him. You guys got to go to the Berkshire meeting. It's incredible. I think, you know, he's one of the best guys. It makes it simple to understand. I think that's why I like it so much, is because it's simple to understand. All right, I'm going to do one more question, because I see the marijuana medicinal benefits. You might be right. Maybe I'm just very biased in that it's bad, and you go to other parts of the world and they don't think it's that bad, and you might be right. I don't know. For me, it's not something that piques my interest, so I just don't even look at it. I'm going to do one more question here, and then I'm going to finish up. Let's see here. Which companies? I'll do this one real fast. Blockchain, which companies to invest in? I would wait till you get some ETFs out there, and then I would invest in those. I'm a very big fan of Blockstream. I think that Adam Back is a genius, and I think his vision for the future of Bitcoin specifically is probably the best one that's out there, and the one that I would tend to follow the most. The title of the live stream says 13 November. Yeah, that shows you how good I am at live streaming. I don't even know how to title these things correctly. My opinion, this will be my last one. So, the opinion of Tony Robbins' book, Money Master the Game. I think that the book was very good in some aspects, and then just very redundant in others. I think that a lot of his research on how poorly mutual funds perform relative to ETFs, with a lot of the stats that he puts in the book, is really enlightening for a lot of people that might not be familiar with some of that stuff. I really like the end of the book where he interviewed various people that are really profound thinkers in finance. I found that section worth the price of the book. Like, if you didn't even read the book and you just kind of skip to the very end there where he's doing all those interviews, I found those to be very valuable and definitely worth the price of the book. His roll-up of Ray Dalio's approach, I find interesting, but it was so drawn out, and the book was so long. It was so much longer than it needed to be. So, I have no thoughts on the new Fed chair. Don't know anything about him, but I do know that he's probably going to have to do the same stuff that Janet Yellen's been doing, because it's not like they really have a choice. I mean, you could put a ham sandwich in there as the Fed, and they'd be probably making the same decisions that we've got right now. That might be a bold statement, but I guess I'm biased on that one too. All right, that's all I got, guys. Thanks for joining me. This was a lot of fun. A lot of great questions out there, and hopefully you guys got some value out of it. If you guys like this, please like the video, subscribe to the channel, subscribe to our Facebook page. Just go onto Google and type in We Study Billionaires Facebook, and you'll see our Facebook page there. And yeah, that's about it. I've got a new what's the name of I don't even remember it, so whatever. All right, guys, I hope you enjoyed this, and hopefully we'll do some more of these. I'll get Stig on the next call so we can kind of have a back and forth, and you guys can hear his thoughts. I'm testing this stuff out. I don't really even know what I'm doing with this live stuff, but I'm checking it out, just trying to learn how to do it, and then I'll start bringing Stig into some of these conversations as well. All right, guys, have a great one.